All right, good. All right, good evening, everybody. A nice spring evening here in Pittsburgh, Pennsylvania. Okay, had a nice bullish engulfing signal in the Dow as well as the S&P 500. So the rhetorical question is that more important than our Morningstar signal over here? And the answer is we saw buy signals over here, kind of a stutter step, and we're seeing another buy signal. So one buy, so there's price buying going in here, going on at this level. Two buy signals kind of reaffirm that. So you take that same context or concept. We had a piercing signal in the NASDAQ, came up, hit a resistance level, came back down. Now we've got another buy signal, the Morningstar signal. So this is kind of an evaluation of, yep, maybe this was a bounce and it could be heading down. On the other side of the coin is we're now getting a buy signal again before we even get back to the lows. That tells us there's buying going on in here. So that's a pretty good analysis to say, all right, there's a candlestick reversal signal, failure, but another candlestick reversal signal. So the probabilities at this point tell us we should start looking for buying to go or start from here. Let me see what I can do to make this smaller. And just as a added exercise, we put the Fibonacci numbers on here from the top. You know, we can pretty much see that if this was our bottom, this is our top, the piercing signal just almost touched that 38% retracement level. So that's another kind of little factor saying that's probably where the buying has started. All right, so which sectors are the strongest? As we can see right now, we're starting to see, or still seeing, that crude oil is continuing its uptrend. Gold almost broke out today. We had a buy stop right up here. After it came up and started fading, we kept our buy stop at this level in our futures trading, because if it broke out through that or stayed up at that level, what we could essentially see would be that this little trend channel would have been breached, putting us into wave 3. Okay, let's see. And in the the futures room, we had a few people that was more adept than I was shorting cocoa after the left-right combo and then the breakdown. This is kind of where you observe the obvious. This has been in a downtrend. Where's the likely target? I would suspect right here. So again, this is nothing more than analyzing the signal and what's happening at the T-line and when to cover. Now, I may have covered here and reshorted back here because what was that taking it up and coming back down doing for us? It was pretty much telling us that they were not going to get up above the T-line, that this little J-hook pattern told us there was going to be more downside. And let's take a look at a few of the other, the dollar slowly coming up, but kind of running into resistance here at the 50. So if it starts rolling over, what's our analysis? That we're in a downtrend, came up, hit resistance, we're probably back in that downtrend. So again, just kind of logical analysis of what's going on in the trend and then what's happening at important support and resistance levels. All right, let's see. I don't want to go to that one first. So if we can look at the market, knowing that it's heading up, and then all of a sudden we see a sector like the biotechs doing a bullish Harami. Oh, this one, I had a question today, which was, we know that we need a bullish confirmation of a bullish engulfing signal, but what about a Harami? And in either case, when we see that bullish Harami, what's that telling us? It's basically telling us the selling has stopped. What do we want to see the next day? We want to see bullish confirmation. So in both cases, you want to see the bulls have stepped in after that signal. Now, this also makes for a very simple analysis of when is that trade not working. Well, if we have a bullish Harami, and this candle right here told us that the bulls were taking control or the selling has stopped, and we see a positive open the next day, the Japanese rice traders have one very rule. We don't want to see it trade back down below this level, especially close back down below the halfway point, because that halfway point is very, very important. If the bulls are in control, the bear shouldn't be able to close it more than halfway down that candle. Same thing on the bullish engulfing signal. If this opens, the Dow opens positive tomorrow, what are we expecting as confirmation of this bullish engulfing signal? That it should be trading higher. And if it opens positive, what is it telling us? Number one, it's confirming the bullish engulfing signal. And two, it's telling us the T-line is not acting as resistance. So where's our next target? Well, I'd watch to see what it does coming down through this downward trend channel. And three, where's our stop loss? Well, if it opened positive and closed halfway down this candle, the candle that told us the bulls were in control, what are we able to analyze? One, it didn't confirm our bullish engulfing signal, and two, it's still trading back below the T-line. And what's our concept of a uptrend? We need to see a buy signal and confirmation staying above the T-line. So anyways, just kind of a simple analysis. Halfway down the Harami or the bullish, half down on Harami or the bullish candle after the Harami on the biotech. Oh. Yes, if this opened positive tomorrow, telling us the biotechs are acting well, but closed more than halfway down this candle, probably tomorrow the T-line is going to be up here somewhere. So if they close more than halfway down this candle and below the T-line, yeah, that's not a very strong sign. That's telling us we're back in a potential downtrend, especially closing back below the T-line. The resistance at around 28, not necessarily. Well, if you're looking at that, you got to remember, we've just had buy signals in this area, and stochastics coming up. I would suspect my first resistance level is up here at the 50. Do all signals require confirmation, or some so strong that we can we don't have to wait for confirmation? The kicker signal is probably the one that you don't really have to wait for confirmation. The rest of them pretty much, yeah. I would rather be a day late and give up a little probability, knowing the probabilities are extremely strong that this bullish signal is confirmed, than try to get in early and then see it open up down here. Because if it opens up positive, we know that we're going to be in a high probability situation of an uptrend. So it doesn't matter whether we pay right here, 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 or here. What we're anticipating is this next move, maybe all the way back up here. So I would rather pay a little bit more knowing the probabilities are that much stronger that I am in that uptrend. Remember, we're not trying to buy at the absolute low or sell at the absolute top. We're trying to get the fat part in between. And when we get that fat part, we go on to something that has another high probability trade setup. You look at ETF of sector to figure out if it is strong or weak, or you look at something else. Kenny, just the fact that LABU, which is the biotech 3 leveraged ETF, had this type of signal today, which on our scans brought it up as a strong reversal. That's all it takes. Now, we can go to other situations, and I think, oops, no, I don't even, there it is. If you have a scanning software like Morton Brothers, up here, let me do this. Up here, you've got different categories. So this is my trading universe, but if I went to the Morningstar industry groups, and it's being sorted by the biggest percent move today, whoops, up here is the biggest percent move. So drug delivery, as you can see, had a nice reversal signal. Personal computers, so you can scan by this, number one, and there's the LABU, or there's the biotech sector. So you can go down, and so we can see that the biotechs, drug deliveries, mining, and oils are still the strong sectors. Well, now you can kind of reduce your scanning search to those sectors. So we'll get to the biotechs here in a little bit. We're already here at the biotech. So if we can identify that the biotech sector has a strong reversal signal, then we can start looking at individual stocks in that sector to see what type of setups. PBYI, nice chart. Expect more upside. So I can go through knowing that I can look into the biotech area and find good biotech reversal signals to pick out which one I want to be in, or which two I want to be in, or three. So here's AGIO. So if we know that the whole biotech industry is starting to come back up, and now we have AGIO that has a left-right combo, right smack dab off the 50 with bullish confirmation telling us the T-line's not acting as resistance, where can we logically anticipate our next move is going to be? More than likely, right up here where the trend was, back up here to the 200-day moving average. Nothing magical about it. Nice strong reversal signal, pattern set up, stochastics coming up. So out of the three we've looked at so far, this one looks the best just because we know a left-right combo is a very strong reversal signal. We also know a left-right combo off the 50 is a very strong reversal signal. So here's ITCI. Don't know whether that's a bullish engulfing signal, but obviously where's our next price move? Probably back up to the 200. So anyways, this is how you kind of narrow down which sectors you want to be in. Here's INO. There's your best friend, Doji gap up. What do we got going here? Probably a J-hook type pattern. And again, this is all just kind of putting all the probabilities or all the stars in alignment. Oh, pshaw. ALDR, Morningstar signal, right smack dab off the 50, stochastics coming up. A high probability trade setup. So anyways, that's kind of putting all your stars in alignment, finding or figuring out which way the market's moving, finding out which sector is acting the best. So we know that the oils, the mining, the biotechs, and the golds are starting to act well. EGN, notice our little trend kicker breakout. That tells me we probably got a strong move coming. ALGR, dumpling top. It would be a dumpling top if it was breaking down. But notice the other, where it's kind of supporting. Came up through the 50, and then it's pulled right smack dab to the 50. Any number fours in the family. Let's see. All right. Hold on to your individual ones. We'll get to all of them. Oil's not overextended. Well, when you're still looking at the oil sector or the oil prices continuing to move up, and right there. So with the oil trend moving up, if you look at this on a long-term or longer-term basis, what do we pretty much have here? We've seen the big downtrend. Now we're starting to see higher high, higher lows, higher high, higher lows. So obviously we're in an uptrend. So what does that tell us about the oil area? It looks like they've stopped selling off oil prices. So all those stocks that were getting slammed are now starting to come back up. So things like Whiting, start looking at this one. Again, we're in an uptrend. We're kind of doing a J-hook pattern. Did I do the right one here? I don't think this is an oil. PETX also setting up. I put that in the wrong place. Oh, we recommended WPZ the other day. Because look at the J-hook pattern on this one. And where did this J-hook pattern all occur? Right here at the 200-day moving average. How did it start back up? With your best friend signal. Little doji gap up. Where's our potential target? Well, if wave one was 13 points, 13 points takes you up in about the $41 range. How do you scan for prospect? You can use Metastock. Metastock is good. Warden Brothers are both good. I use them both. Yeah, but we're not buying the weeklies on these. So even if you go to your weekly chart, this is the weekly on Whiting. What I'm looking at is what is my best trade setup for probably the next 3, 5, 10 days. Well, this looks good as far as the weekly, and it also looks good as far as the daily. What was the other one we were looking at? Oh, Labu. Yeah, remember, if you're not buying Labu, I don't know what the weekly looks like. There's the weekly. Weekly's in a 45 degree. Whoops, that's the 60-minute. I went backwards. That was a daily. There's a weekly. I'm sorry. I'm trying to. So yeah, even though this looks not as good as the Whiting chart, what we're using Laboo to tell us is what's happening in that industry. So if you like trading the ETFs, that's not a bad chart to be trading. But again, this was supposed to be an indicator to tell us that the biotechs are starting to come back. We might be more better percentage-wise to buy, and probability-wise. Yeah, trade your time frame. So if you are a longer-term holder, you're going to probably look at the weekly. If you're a swing trader, probably more of the daily, and then you can use the weekly as your backup. Sean, no, I'm not concerned about big moves already. I'm more interested in what the chart pattern is telling me, because for all we know, they could be taking remember, we're trading the patterns. So I'm looking for things that have had a big move, pulling back, and ready for the next big move. So we're not trading the big moves. We're trading the potential chart patterns that are going to give us what we're looking for as far as our price moves. Let's take a look at a few more here. NCS, there's that J-hook pattern. Fry pan bottom, breakout. That's got a very good looking chart. And so question is, all right, it's already moved from here to here. Isn't that a big move? Yes. But this is what we're buying, which is the pattern that usually develops during a big price move. It's your wave 2 going into wave 3 J-hook. And FMSA, another nice little J-hook. So I might not buy this right here because it's already had this move. So now I'll use this level. I'll put a buy stop at 450. But if it comes through here, I know that my wave 3 is in progress. Some more of the oils. CWEI. There's that little slow curve. And what did they do to get the resistance level? They gapped up through. Where do you think our next target is? Probably all the way up here. So that's a good, that's almost a 50% move just to hit the 200. Wave 1 is about the same. Yes. When we're kind of calculating a J-hook pattern, wave 1, wave 3 is going to be approximately the same as wave 1. And Atwood, you can see the fry pan bottom. You can see the big breakout. Now you can see the 45 degree. Fred, we don't know that for a fact. That's the implication. But remember, you watch the charts, because the first quarter of this year, lower oil prices meant bad for airlines because it meant the whole economy was slowing and people wouldn't be flying. Well, that psychology may be changing at another time where, yeah, higher oil prices means bad for airlines, or good for airlines, and that higher oil prices say the economy is getting better, people are going to be flying more. So what we're not buying or selling based upon historical assumptions. We're buying and selling based upon what the investor sentiment is telling us the charts are doing, or the charts are telling us what the investor sentiment is doing. If you get in on a long because of a positive candlestick signal on a positive day, what do you do if the market opens down the next day or two and drives the stock price down? That's the whole point of using the T-line that and the buy signal. If you buy on a bullish signal and it trades lower, use the T line. It needs to trade higher. It doesn't need to trade, or you don't want to see it trade back below the T line. If you bought here with the anticipation it was going to break out above the T line, what don't you want to see it do? Whoops, not do that, that's for sure. Now I don't know what I've done. In this case, if it opens higher and starts trading higher, you don't want to see it close back below the T line. So if you go into a, right now, I would have covered the short position, but I wouldn't be long. Yeah, it needs to stay above the T line, or it needs to stay above the point that it's not negating the buy signal, which is usually the halfway point. And PTLA, there's another good-looking little chart. Came up, now it's back up above the 50. NTRS, oh, I've done something terribly wrong here. Why do I have that on here? I have no idea. But here's another case where, say you were buying here and it closed back down here. Where are you? You're back below the T line and you've closed more than halfway down the candle that told you the bulls were in control. Close out the position. No, that's what I was getting to. I know pretty much, not on any quantitative study, but I know that probably 1 out of every 3 of my trades are not going to be good. And if before, my ego always said, well, it was because I was smarter than everybody else, it should go up. Now I realize that no matter how good my chart pattern is, I've still got about a 33%, yeah, that could be a bearish J hook, but I wouldn't have it over here. I don't know what, oh, I know what it was. It was NetEase. NetEase broke out nicely, broke through this level. So it gapped up through this level, which was the another one that, oh, this is why this is important. When you go gap up through a resistance level like we see on CWEI, that means everybody could see there was a resistance level here and they gap through it. That means they have no more concern about that resistance level. They're going to another higher level. So that was NetEase I was trying to find. So if you go into investing, and it used to be, oh, that in commodity trading, the adage was that if you could win 50% of the time in commodity trading or futures trading, you'll make a fortune. Well, with candlesticks, I started discovering I was probably winning 2/3 of the time. Now that winning may mean I only make 0.3% on a trade, or I make 300% on a trade. I just know I'm going to have the probabilities of being in the right place at the right time. But the other side of that coin was that I finally realized 1/3 of my trades aren't going to work. So it didn't become an ego thing anymore if I did a bad trade. I just knew that 1/3 of my trades weren't going to work. And when I realized that, I closed it out and I moved on to something where the probabilities were in my favor. And if you keep doing that, over the long run, you're going to make a ton of money, because you're always going to be moving out of situations that aren't good and looking for situations that are good, have a 70% probability that you will make money with that trade. HCLP. What can we kind of anticipate here? We've got kind of the bobble going on, but if they come back up through this level, we know wave 3 is going to be a pretty strong price move. Did we do, we didn't do a couple of the oils. EGN. Another one that you want to be buying on positive trading. Maybe we did do that one, or at least they're all looking the same. An ETP, kind of little trend kicker, slow curve, closed right on the 200. And what's that also relevant to? That's right where the high was before. Makes this very simple. If it opens positive, it's confirming our little trend kicker. It's telling us the 200 is not acting as resistance, telling us this level is not acting as resistance, and telling us if this is wave 1, wave 3, it's got a lot of upside. ACAD, telling us that the 50 is acting as support. There's our inverted hammer, bullish confirmation. Again, there's one of the statistics that is unquantified or proven. It's just my observations through the years that probably you've got a 95% probability that after this positive open, after an inverted hammer, that you're going to be in an uptrend. So I wouldn't be afraid to be buying this one on positive trading tomorrow. And GMZ, another one. That's the, oh, that's a Morgan or Goldman Sachs Income Opportunities Fund. All right. Not as wild and exciting, but apparently pays a good dividend. Hold on, Ram. We'll get to all of them. Just let me finish out what I've got here. On the short side, observe the obvious. There's your doji gap down on Chipotle. Where's the next likely target? Price somewhere down in this range, possibly to the bottom of the trend channel, taking you all the way down here. And that's, again, based on a doji right at the resistance level, followed by a gap down. There's your slow curve on HQY. Wouldn't be afraid to be shorting this one on weakness tomorrow. There's your dumpling top. You can see that the trajectory is starting to pick up steam at this point. Stay, that same scenario. Big dumpling top. They're starting to sell this off, and what do we expect coming out of a dumpling top? The exact opposite that we would expect coming out of a fry pan bottom. A strong force to the downside. I'm putting a little star next to that. Now, I may just think there was another stay. Oops, that one's already gone. Okay. Notice where this one started its downtrend. There's that belt hold showing you the weakness has started. And CSH, just starting this slow curve. And what did we have today? A bearish doji sandwich. On shorts, are you concerned where the stochastics are? It depends on what type of pattern you're looking at, Michael. Obviously, you want to sell a sell signal when stochastics are in the overbought area. On a pattern, like a dumpling top or a bearish J-hook pattern, usually your stochastics, when it starts breaking down, is already going to be in the oversold area. So a pattern has a different perspective or a different criteria for your stochastics. Usually a pattern is going to break down once you're already in the extreme, whether you're overbought or oversold. When you say buy on positive trading tomorrow, do you mean, whoops, I've got this, any positive trading or just if it closes higher? Sometimes I buy in the morning on a solid positive and goes negative before the end of the day. Yes. And darn, which one was the belt hold? Was it CSH? Yes, and that's going to happen. Remember, no, it wasn't CSH. Oh, you're buying based on the probabilities. So if you see the market is heading up and then you see your scans came up with a nice bullish chart pattern, and the next morning it's opening positive, yes, you buy it. Now, is there the possibility that you're going to have a positive open and then it open lower or trade lower? Yes, but the probabilities are that if everything's setting up, you want to be buying, and if it's one of those that 33% that didn't work, you close it back out and get your money ready to go on to the next one. A belt hold is when they gap it way out of the trading range and bring it back into the trading range. And the Japanese rice traders describe it as the two wrestlers, sumo wrestlers, and one's trying to back out of the ring, the other one grabs his belt and pulls him back in. It means they're still in the ring fighting. Yes, and that's when, exactly, Steve, that's when your stops are important. For example, today in live cattle, we had a kind of a big reversal day that told us the 50-day moving average was going to be acting as support. And today, it started trading positive. So started buying it after it opened at this level. But if it was opening at this level and confirming this pattern, the J-hook pattern, which way should it be going? Obviously up. When it came back down through the open, we closed out the position because what was that telling us? They weren't heading up in this direction. They're heading back down. So we bought up here, closed out here. This is the whole concept of when something isn't working, get out of the trade with a small loss. Because what we're looking for is the trade that is working that's going to produce big gains. So if I've got 2, 3, 4 small trades where I got out with a $300 loss, a $400 loss, a $700 loss, but then all of a sudden the next trade works and I've got a $6,000 gain, those little losses was just the cost of doing business. My stochastics are at 12.33. They're slow stochastics, and there's nothing magical about them. It's just that one night I sat down and said, all right, if this is the bottom, where should my stochastics be? And the norm at that time was 14.55, but that was a little bit too slow for the swing trading I was doing. So I came up with, eventually ended up as 12.33, and that's pretty much worked for me through the years. First data, there's that bearish J-hook pattern. So what would our criteria be at this point? Well, we want to go short if it comes down through today's low, because that tells me if they're still selling it off and they breach this support level, that means I've got wave 1, wave 2 going into wave 3. So if it opens lower and starts trading lower, where do I put my stop? Probably right where it opened, because logic says if this came down and then came back up through the level where it opened, it's probably producing a signal, like a hammer signal. And if it produces a hammer signal, where is it doing it? Right at the same level it bottomed before. That tells me I've got a strong probability that I want to be out of that trade. If you were in Apple and you were short, then you saw the inverted hammer on Friday, only gave us one option. That if it opened positive after an inverted hammer, what's our statistic or unofficial statistic? That if it opens positive after an inverted hammer, there's probably a 95% chance or greater you're going to go positive. So if you were short and it was opening positive today, you closed out the position. Now, inverted hammer with a gap up and a close above the T line on Apple. Did their fundamentals change? Absolutely not. Did the perspective change? Yes. Somebody came out, was it Warren Buffett or one of the biggies said they were, oh, Buffett, okay, was buying Apple. All right, do you think that's going to change anything as far as the fundamentals? Absolutely not. But the perception now is If Warren Buffett's buying, it must be a good buy. That's where the buyers start stepping in. Netflix, you can see what's happening. There's kind of our little Morningstar signal. If I was short, I would have covered it. And this is what makes it very simple. If you're in the oversold condition, and you have a doji, where's the safest place to put a stop? At the high. Because if it comes up through that high after a doji in the oversold area, that means the bulls are stepping in, especially in the oversold area. Take your profits. Wouldn't be ready to buy this one yet until they close above the T-line. Amazon, ever since that message, notice what it hasn't been able to do. Hasn't been able to close back below the T-line. And Tesla. So here's why you want to know what your individual signals are telling you. When is a buy signal a failure? Let's say, let me finish this. What's this telling us right now? We're in the oversold area. If you were short Tesla, what's it now telling you? There's lots of indecision here, and the downward trajectory isn't there anymore. So if I had been short, I would have started covering in here, because what's my risk reward? I'm starting to see potential reversal signals in the oversold area. Cover your position. Now what's the alternative here? Either it's going to go sideways, up, or down. So my probabilities of it going down have been diminished. Now, if it comes back down through this level after hitting the T-line, I know that I'm in wave 3 to the downside. If it starts trading positive and coming back up through the T-line, that tells me this was a base and it's time to start buying. I thought Buffett owned Berkshire. Labu, yes, you did have a signal. There was your signal. There was your confirmation. Then the next day, it closed more than halfway down this candle, but it bounced off the T-line. So what was the logical trade scenario? It needed to stay above the T-line, or it needed to open positive and trade positive. The fact that it gapped down told us, yep, we got a little double top versus a confirmed buy signal. Let's see, I forgot one on the short side. HW. Bullish Harami. What did it tell us? The buying or selling had stopped. Where did the buying come up to? The T-line. And then what's happened at the T-line? There's your little shooting star, bearish engulfing. This one can be shorted on weakness tomorrow. All right, so the reason, again, that you want to know what each individual signal tells you and where your stochastics are is when are the probabilities what are your probabilities, or what are your probabilities telling you? Which one did we just do? Wow, we just did one that was, but we can start seeing when the probabilities are going against you. If you've got a situation where you can't tell which way it's going to move, close out the position. What was it? Tesla, thank you. The probabilities are telling us now we're in the oversold area and we're starting to see support. Close out your short position. You can always, I'd rather give up a little bit of profitability by being back in the trade when it tells me which direction it's going versus giving up some of my profits, because that's what I'm working for, those profits. I'd rather make less profits with a higher degree of probability than give up profits when I saw the probabilities were going against me. Okay, are there any general questions on candlesticks? Buy and positive trading, all right. All right, I guess if not, Jim, go ahead and do the double line. And then 4.8 seconds, do the next double line. UNT, all you can do with this one is just stay long. Nothing exciting, just a slow, steady uptrend. OVAS. This one I'd be apt to buy on positive trading tomorrow with your bullish Harami telling us the stutter step. Notice this was not a reversal. This was just an up day and a downtrend. This is your reversal signal, bullish Harami, bullish confirmation. TXMD, bullish engulfing right off the 50, bullish confirmation. This one, I'd be ready to buy in positive trading. Now, if it opened positive and traded lower by the end of the day, what's my criteria? I stay in it as long as it doesn't close below the T line. Whiting, we did. Whiting, you can buy this one on positive trading. WPZ, we're holding on to. Whoops, is that the wrong one? WPZ, we're holding on to. WPX, that's a good looking chart also. And notice what they did coming off the T line. They gapped it up a little bit. See, we did Tesla. SWC. Here's one that could have been bought on positive trading today, but did a doji. So we have a very simple criteria. It's going to move in the direction of how they open it after the doji. So if they open it lower and start trading it down, you close out the position. That means you might be doing a stutter step, coming back down to the 200. If it opens positive, you stay long, and you just set your stop so it doesn't close back below the T line. Again, just creating high probability scenarios of when to be in and when to stay in. You can buy this one. You just have to be aware that you've got a big wedge formation. So I'd be more apt to be buying it if it came up through the 650 level, telling me it's broken out through that wedge. Nugget acted strong today because gold was up for a little bit. But as long as gold is not selling off, it's telling you a lot of these mining stocks are going to stay up strong because they're in an area where they're making some good profits based on the overall price of gold. Silver Wheaton, stay long on this one. Oh, that was Silver Wheaton. Did I get to? Nope. Hit the wrong one. NVS, that's a good looking chart. Whoops. Make it bigger. Bullish engulfing. Must be an ADS. I wouldn't be afraid to be buying it, though, on positive trading tomorrow. Delphi, stay short. AutoZone, I thought, was advanced auto. It's also coming up. JB Hunt. Right now, you stay short. Nothing there to be buying. If you are short with the bullish, you're not quite in the oversold areas, and you've got an inverted hammer, but just to be safe, I'd have a buy stop just above today's high. It shouldn't come back up through that level if the sellers are in control. Kahlo, another one that not necessarily a reversal signal, but positive open today told us probably which direction it was going to go, which would be it's going to come up and test the T line. And what else we got here? Watt. Nothing yet. If you're short, I'd be ready to cover this on any positive trading because it's pretty much telling you the 50 is acting as support. Right now, I probably wouldn't be long or short this one. U.S. Steel had closed below the T-line, but it's also done an inverted hammer Harami. Remember, the Harami tells you the selling is stopped. The inverted hammer tells you if it opens positive, you can start buying. Then just be a little bit more diligent when it gets to the 50 or to the T-line. AEGR. I don't have the volume on here, but another one that can be bought on positive trading with the anticipation they could pop it up to this level, which would give you about a 70% return. ASM, that one's not working for some reason. EBS, that's a good looking chart. You can buy this one on positive trading, telling you the J-hook breakout has occurred. ALKS, this one you can be buying. There's your doji. Gap up or bullish booster signal and breaking this downward trend channel. Good chart. Hero, another one that I wouldn't be afraid to be buying. I'm pretty sure there's big volume in Hero. This one I would buy on positive trading. There's your best friend. And Sienna, just stay short until you see a buy signal. GSAT, look for a 45 degree to come off of here. At this point, if I was long, I wouldn't want to see it close back below this level, even though that's a pretty hefty percentage. But I would suspect you're going to be in a 45 degree from this area. Again, anytime you see that big price move, that means there's been a definite change of investor sentiment. PT XT isn't working. PTCT got the little morning star signal. You can be buying this one on positive trading. There's the crude oil for oil. And here's the futures. This is the June contract. You can see it's still in this nice uptrend, which means the oil should gain some strength. A lot of them were well oversold with fear that some of them may not make it. Now with oil coming back up, that pressure is being relieved. ECA, another one you can buy on positive trading. Again, the double doji setup, bullish confirmation. Look for the J-hook pattern to be in progress. XIV, just a slow, steady uptrend. You can stay with this one. Use the T-line as your stop. And Fidelity, another one that you can stay long. After that big gap up, look for the 45 degree to continue this uptrend. VRTU, you can short this one. There's that slow curve gap down. That means they're willing to get out of this one with great enthusiasm. So you can get ready to short that one. 3D, notice where it's supporting, right smack dab off the 200. Notice your inverted hammer, doji, gravestone doji, which is your ultimate inverted hammer. So the positive trading today, I would have covered my short position. I wouldn't be ready to go long until you see it actually closes above the T-line. ABBV, there's your belt hold type signal. When you see a belt hold, essentially what it tells you is there was lots of sellers and the bulls sopped up all that selling, so there's no selling in the way, so headed back up. Now you had your evening star signal, left or bearish engulfing, should have closed out the position, but now you can get ready if they start bringing it back up above the T line, because it's our criteria. As long as you see a candlestick buy signal to close above the T line, you're still in an uptrend. But at that point, you still use the T line as your stop factor. Ellie Mae, you can buy this one as just a very slow, sluggish trader. But if you like it, you can be buying it here. Lynette, another slow, sluggish sideways. If you like it, you can be buying it. Just be very diligent when it gets to this level. It's not a very active mover, but right now it's moving in the right direction based upon staying above the T line. NXPI, another one's got a little scoop pattern. I'd rather buy it right here knowing that it's broken out of that little scoop area. And CHTR, this one you can get ready to short. This one, I think there was another one. Darn. Another one of the, I can't remember what it was. But you can short these anticipating that if they get through the 50, they're coming down to the 200. Bank of New York, nothing exciting here. I wouldn't be long or short this one. There's nothing going on there today. Silver Wheaton, stay long. AEM, stay long. Just be careful, because now you did a little shooting star right here at this level. If they open it lower, you might take profits. They're going to come back and test the T line. And if they open it lower, pretty much tells you your trajectory is flattening out at this point. TECK, Hugh, that might be a lap. TCK, Morningstar signal. After a bullish Harami, you can buy this one on positive trading tomorrow. Silver, nothing great. Not showing a whole lot of resiliency. Gold is a little bit better. Yep, not quite as maybe it was earlier. It needs to break this downward trend channel. So if gold starts coming back up, especially through today's open, that's going to be a good sign. And let's see what gold is doing right now. GCAM. Gold is trying to trade back up. So watching this downward trend channel, if it breaks through there, you're in kind of your cup and handle, your classic pattern. RRMC, you stay long, but now you use the 200 as your stop. It shouldn't come back down through there. If it does, it's telling you it's going to be in a bobble for a few days. Graco, you just stay long. It's not a real prolific mover, but right now it's back in an uptrend ever since your big bullish engulfing, and now you have a doji sandwich, so it's working in the right direction. It's just not a high profit builder. Freeport, nothing yet. If I was short, I'd get ready to cover shorts on positive trading, but I wouldn't be buying it until it gets back up above the T line. We get more time. Yes. That's because we got done a little bit earlier. Give you that half a second. Whoops. PBG, if you're going to buy it, it has to open positive tomorrow and start trading positive. If it opens lower and you're long, close it out, because that means you're stuck still in this sideways mode. Microvision, nothing here yet either. Wouldn't be long or short. This one has just been stronger than bear's breath. You stay long. These are the type that can really make you a lot of money. This one could go to 15 for all we know. So right now you stay long, but you pick a spot that it shouldn't be trading back. So at this point, I wouldn't want to see it trade back below the halfway point of this candle. That means the profit taking has started, and you don't know how long that profit taking will persist. So at that point, you go to your 10-minute chart and see what it's doing. CPE, just stay long. Another one, though, that you had a shooting star right at the breakout level, so if it opens lower, you're probably coming back to test the T-line, meaning your trajectory isn't going to be all that strong. JetBlue, nothing yet. You have an inverted hammer, nothing positive now. If it opens positive tomorrow and I was short, I'd probably cover and then just re-short if it came back down to that level. And that's JetBlue. Win. Nothing. You're in a wedge sideways. I wouldn't be long or short. Whirlpool. Whirlpool, you stay short, except you have a hammer in the oversold area. It makes this very simple. If it opens positive, you cover your short position because they're probably bringing it back up to test, at least test that moving average. I forgot what it was. Pause, you just stay long until you see a sell signal. Oops. Not a stock. All right. Did the SPY have a reversal today? No, not quite a reversal. But the S&P, I don't know how to get the S&P 500 over here. That's not it. But the S&P pretty much looks the same as the Dow, which was a bullish engulfing signal today. CNI, CNI, nothing. It's basing. I'd probably be covering a short position on any positive trading if I was still short. I wouldn't be a buyer, though, until it gets back up above the T-line. I think we did Bank of America. Nothing here to get excited about. Apple, oh, you could call it a scoop pattern, but I'd be more looking at it as an inverted hammer gap up. Whatever you want to call it, though, it's got the little makings of a scoop pattern. PetMed, nothing yet. More than likely, if they trade it positive tomorrow, it's still in this slow uptrend, staying above the T-line. Nothing that I'd get too excited about, though. And two, I think, what was the dividend yield? Somewhere around 8.8%. You can be buying this one on positive trading because then you'd have that little flutter kicker coming off the T-line, which would tell you that at least your uptrending channel was in progress. So you'd be collecting the dividend. VEEV, get ready to buy this one on positive trading tomorrow, breaking out. VUSI or VUCI. Told you exactly what happened here. Hit the 200. So if it opened lower tomorrow, I'd take or come out of it because it's basically telling you they can't get up through this resistance level. If it opened lower, close it out. Worst case scenario is you can always buy it back if it came up through that level again. Home Depot, just not a good trader. I wouldn't be long or short this one. If you like it, because of the inverted hammer right here on the 50, you can buy it. It's just you're not going to make a whole heck of a lot of money with it. TPC, there's your kicker signal. There's your 45 degree. You just stay long. At this point, with it being in the overbought area, put your stop right here. It shouldn't come back down through that level if the uptrend remains in progress. IBN, nothing there that I'd get real excited about either. I'd be someplace else. And Petrobras, that's got a lot of scandal going on in Brazil. Nothing here that I'd buy or sell. I'd be someplace else trying to find a better, there's better oils right now to be trading. Oh, maybe the SPX comes up over here. No. F.SPX. No, for some reason, I know I can get it. SP 500. Oh. That's not it. I'll find it. PRMW, all you can do is stay long. Now you've had at it close right here. If it opens lower, it has to stay above the T line tomorrow. That's all I can say. It's just in a slow uptrend. MRD, failure at the 200. If it opens lower, you close it out because it means it's not really going anywhere. And ODP, Office Depot, right now there's nothing you can do. I wouldn't be in this one unless you were short. All you can do is stay short. Looking for alternative SP tickers. Found SPU. SPU. Sky People Fruit Juice. That's a doozy. And Bidu. Yeah, there's your morning star signal. Not really a kicker. Remember, a kicker has a big, here's a kicker. Big candle, big candle. That's a bearish kicker. This is more, yeah, just a morning star signal. Yeah, I can't remember what works over here on this one. I'll find it. I say I'll find it. I haven't looked for it in months. Conoco, you can buy this one if you like it. Obviously not a very fast mover, but it's still in this trend channel. Okay, sold only in Seattle. All right. Tezar, nothing here to get excited about. As you can see, very stout trend. When it hit the first resistance level, was selling. I'd be trading something else. All right, last one. MT, just stay short until you see a buy signal if you could be short. Otherwise, you don't buy this until it gets back up to through the T line. Max Linear. Yeah, you can still be buying this one because it's just at the breakout level. Yeah, I wouldn't be afraid to be buying this one. Okay, we'll call it a night. We'll see everybody bright and early in the chat room tomorrow. All right, we'll see you then.